the stock, we'll go across to Mangalam Maloo for our special Bhavcopy segment where he's going to talk about stocks that have been buzzing in trade recently, and he's picked up one from the plywood sector. Mangalam, it's a long lead-in. The suspense is killing us. What do you have for us?
Well, Rima, tell you what, the plywood sector has been buzzing around in all through 2016. If you look at it, the likes of Greenply and Centuryply, the market leaders are up anywhere between 40 to 50%. But look at the smaller companies out there, Uniply, Rushil Decor, as well as Stylem, all of them up anywhere between 70 to 163%. And then that caught my attention towards one small plywood company, which has not gained as much from a year-to-date perspective, but in the last recent times, it has been buzzing around. And that stock is Archidply. As we speak about it, it's up almost 16% in 2016, much less as compared to its peers, but up 32% in this week, and at the same time up almost 41% in this month itself. So what does this company do? It's got a market cap of 150 crores with a debt of almost 45 crore as of end 2016. It sells plywoods as well as laminates under the brands Archidply and Archidlam. 2/3 of the revenue of the company comes from wooden products and 1/3 comes from laminates. At the same time, if you look at it, it has got a 10 to 12% market share in the organized plywood market. Remember, 30% is with Greenply, the other 30% is with Centuryply, and the others, the remaining part of the organized plywood market is with the other brands. So take a look at the capacity. Their capacity is close to 7.2 million square meters per year, as compared to Uniply, which is 6 to 7 million square meters per year, and that is because they've indulged into some capex, so we need to know the exact number there. Greenply and Centuryply are far ahead with 32.4 and 51.7 million square meters per year. If you look at the revenue over the last few years of the company, they have steadily increased at around 12% CAGR from 171 crores in FY12 to close to 278 crores in the last fiscal. The margins, they have been stable between that 5 to 7% mark, and they had increased in FY14 and FY15. The management said there was a demand problem in FY16, which led to the margins declining by a bit, and they expect the margins to stay stable in FY17 at around that 7% mark. But going forward, they expect the margins to increase, and that is what the management told us, or told me, when I spoke to them yesterday. And this brings us to the key triggers for the company going forward. The first big trigger for Archidply going forward and all the plywood companies is the fact that the plywood demand will jump from 5 to 6% in FY16 to almost double-digit in FY17, primarily on account of the higher infra spending that is going on and the government's push towards smart cities. At the same time, the company has secured its raw material by investing in a new manufacturing unit for veneer as well as plywood in Myanmar. So the raw material is secured after this, and they've started the first phase of production in March 2016. So by the time operational efficiencies come by, it will be FY18, and going forward, they will also invest 10 crores in increasing their laminates capacity. The biggest trigger, however, for this company and all the other plywood companies is going to be GST, because if you look at it, GST will improve the plywood, or be a big impetus to the plywood and laminate industry, primarily because it will reduce the price differential between organized and unorganized players. When I spoke to the management, the difference between organized and unorganized players is anywhere between 15 to 25%, and they pay 28% in terms of indirect taxes. So if the GST does come by at around 22% or 18 to 22% is what we're talking about, we can expect some benefits coming in on their margins. And at the same time, the plywood market, unorganized market, which is at around 65 to 70%, will shift into the organized space, which will help them. So that brings us to the last point, the valuations. If we look at the stock price movement and keep that into consideration, on an FY16 basis, this trades at 26 times FY16 earnings, which is comparable to Greenply and Centuryply. But remember, we spoke about the size differential between Archidply and the market leaders. The smaller companies should come up for you, and there the valuation differential is vast. 26 times as compared to 108 times in Rushil Decor as well as Uniply Industries. Stylem is stable at around 28 times. And if you look at Uniply, which is the closest competitor, it trades at 108 times trailing earnings, but they have indulged into some capex, which has tripled their capacity. So even if we do account for that, it would be trading at around 40 times, still a big differential. And that is why perhaps the stock has seen a surge in the last few weeks and the last month.
Mangalam, thanks very much for that. Just one quick point. The GST, of course, is the big trigger, but you also said that demand will increase, right, in financial year 17. Right. Have we already seen that showing up in the first quarter, numbers?
The first quarter numbers were good for Century Ply as well as Green Ply, so the demand has increased. They did indicate that the outlook for the second half is going to be good as well. So the monsoons coming by, one can expect the demands to be good, or the demand to be good. It'll definitely, it'll be a tall task to see a 10% growth as the management has said in the annual report. But even if it's better than last year, it would be a positive sign for all these companies.
All right, interesting data there, Mangalam. Thanks very much. Thanks for that deep dive into that sector and that company.